Today, we will talk about financial solutions for times of crisis with our strategic ally, Barry Watkins from Clever Finance Solutions, and with Paul Raftery, our CEO. Good evening, gentlemen. How are you today?
Well, thank you, Anna Chris.
We're very good. Thank you, Anna Chris.
Okay. Today, we will talk about, as I said, financial solutions for times of crisis. How are we gonna focus this chat today? How are we gonna make the statement of the importance of start to taking clever solutions for your finances in these times?
Yeah, I think it's important at this time where a lot of things you need to have the cash flow or the debt behind you to actually be able to fund yourself through this time. A lot of places are in lockdown, so businesses, individuals are suffering from a lack of income, and yeah, there's a lot of government stimulus being injected in different countries, and it's all there to help prop up the system to keep going.
I think there's a natural reaction, Barry. People want to hoard cash. So you're seeing people not paying their bills or paying part bills because they want to sit on cash because of uncertain times. So one of the things people like you do for people like me is say, we can provide you with cash lines, you can pay your bills and keep the cash flowing.
Yeah, exactly.
So what we're going to do is we'll have a positive chat about how to focus on our finances during this crisis, right? So let's just step a little bit back. And Barry, could you please tell us about Clever Finance Solutions? What do you do? How do you work?
Sure. So we're a finance broker here in Australia, and we help individuals and companies find the finance they need to operate. For individuals, it's often for buying houses, cars, and those sorts of things. And for companies, it's about, could be buying an office to work out of or a premises to work out of. It could be cash flow funding to keep them going through these times.
Okay. Does it cost me to use your services? For example, if I need to get some money to do any of those things you just stated?
No, it doesn't cost you as the end user to anything. We get paid by the lenders generally via a commission payment.
Okay, who are the lenders in general? What type of organizations do you work with?
We have various lenders from in Australia here, the major banks, the second tier banks, third tier lenders, but we also have access to private funding as well. There's still a whole lot of it used to be called solicitors funds, but basically pooled investors who are happy to invest in projects and things as well if they can see a worthwhile return and an exit, which is going to make them some money.
Okay, so let's go take it step by step. Why, for example, should I use a mortgage broker?
I guess because we have access to all those different teams of people. For you as an individual being a business owner or looking to buy a home or something, you can sit there and you can look up the internet trying to find all the details. But with us, we know all the different lenders that are out there, what sort of appetites they have for different things, what sort of policies or exclusions they may have. There are a number who have come out in the last few days excluding certain industries like tourism and stuff because they've been affected by this so much. So we have that knowledge there for us, whereas for the individual to surf the internet away and find it could take you a long, long time.
But I also think the key thing is people like Barry are licensed. They have the experience and the expertise and the recognition by government that they know what they're talking about. For example, Projects RH does not have a credit license. So I can't give advice on credit. So I turn to our strategic partner, Barry, for advice on debt, securities and debt. And I know from the years I've known Barry, he has that network and personal expertise that you just don't find by going on the internet. The internet can be very deceptive, and quite often Barry knows the person to speak to, and it's a person business.
Yeah, it's always important to go to the people who know what you need to know. For example, if I've been thinking to buy my first home, should I first find it and then make an appointment, or how does it work?
Generally, we would recommend people go and make an appointment to see a broker first, just to check what they are thinking of doing, how much they want to spend, and that they can actually afford that, and that a bank or someone will lend them that amount of money. It's not, well, it's a bit pointless going to find a home which you think, oh, yep, I love this, I want to buy this, but then you actually can't actually afford it. So we would normally suggest come and see us first.
So again, you need to go to people who know what they're doing.
Yep.
Okay. Why is the cheapest interest rate not always the best?
Again, sometimes it's a particular feature or function you want. So some people like to park their money. So if they have spare money, for example, they want to park it into a loan. It gets treated differently whether it's an offset account or a redraw. So sometimes, or generally, to get a loan with an offset, generally has a higher interest rate and maybe a monthly or an annual fee. But that might be important for tax considerations or other things. So that might work more in their benefit. So it's not always about the rate. It's about the best deal for the outcome.
Which of course applies to many different things in whatever business you might be working or whatever investment you might be looking to do.
Correct. Yes.
Okay, so I'm in Colombia, right now, and here we don't have credit files. We do have like credit history, but I hear in Australia it's very important to have a good credit file when you apply for a loan. How do I see it, or how do people access it, or how do you build into that?
Yes, so here in Australia, through the last 2 years, we've gone through a major upgrade of credit files here. We used to be just probably similar to you guys, a credit history where you could see inquiries and things, but it didn't really have any detail as to whether any of that went through. Now our credit files here have details as to your current facilities, repayments, if you're behind repayments, how far you're behind. It has a whole lot more detail. And associated with that, they also generate a thing called a score, which is from basically 0 to 1200. For some lenders, if your credit score is not high enough, they won't actually give you a loan. They won't even entertain you. For other lenders, they're actually basing your interest rate is based on what your credit score is. So the higher your credit score, the better interest rate you get. And we're expecting to see more and more of that come as a way of banks and financiers being able to differentiate themselves, being able to offer a better rate for a better credit score. So generally, the higher the credit score, the better. We say over 750 is good. And you ask how you look at it. Most of the time you can do a simple internet search and you'll find many places that will allow you to do a free credit file check. Otherwise, if you want to, there are also some of the paid facilities. They tend to more be you subscribe to a yearly service and they actually send you alerts whenever somebody accesses your file. So it's more than just checking your file once. It's a continuous thing that they do, but you pay for that.
Oh, so it's can you find this might sound like very ignorant, sorry. Do you need somebody to work your credit file to help you build a good credit file? Is that accurate?
Not really. Your credit file is generally based around, so normally it gets reported things like who your employer is, so therefore how long you've been at work, if you've had credit facilities. So, for example, if somebody had never had a credit facility in their life, their credit file probably wouldn't be great because they don't really have much on file. So generally, even if you get a credit card when you're younger and you keep that going, and as long as you're repaying that well, it helps build your credit file. any of those sorts of things. As long as you've got good repayment history is the main thing.
Okay. So let's move forward. What is a residential property and what commercial property, and how is lending different for residential or commercial property?
Okay. So residential and commercial. Residential is generally something you can live in. House, a unit, boarding house, maybe granny flat, those sort of things tend to be residential. Commercial is more something that you would work in or a business would operate. So, an office, a service station, a warehouse, a factory, those sort of things would be commercial. Obviously, commercial things, because of their nature, probably cost a lot more than residential. Although in Australia, some might disagree with that in Sydney. House prices here are a bit ridiculous. But anyway, the differences in lending. So with residential, financiers will tend to lend you a lot more. So you can use a lot smaller deposit. Some places as small as 5% deposit to get started. Whereas with commercial, it tends to be that you need more like a 30% deposit. Commercial lending tends to be a little bit higher interest rate. And there are a few other differences. They tend to have higher annual fees or monthly fees and things. Obviously, the residential is generally the owner occupied, so they tend to be a bit less fees and things in that. And that's all the fees and stuff are disclosed in any residential lending.
Okay, so there are like different credit lines. What documentation do I need?
Oh, that varies a lot. Here in Australia, residential lending is regulated. As Paul mentioned earlier, you have to be licensed to do residential lending. So they tend to want more documentation to lend to you because it's individually based. There's a whole lot of hardship provisions and stuff lenders have to abide by. It's more regulated, so they want more information. So it can range anywhere from everything or statements for everything you've got for 3 to 6 months, whether it be credit cards, car loans, home loans, just your living expense, your normal bank account where you transact through to go shopping and things. They want statements for that to see how you're living and things. A ton of stuff. Whereas at the other end...
Yeah, Barry, could you comment a bit on responsible lending and why banks do this or financial institutions seek this information?
So responsible lending is part of the Act that they have to follow. And part of that is obviously to make sure that you can afford a loan that is not unsuitable for you. So they look at, responsibly, they have to look at statements and things to make sure, A, the income you're saying you get is actually the income you do get, and then B, the expenses that you've got is actually correct. So they'll look at all of your transaction statements to see what living expenses you use. Some people send kids to private school and pay a lot of money, some don't. So they look at all that sort of thing to make sure you can actually afford the loan.
But that is like a constant in the Australian financial system. There's a lot of transparency, right? A lot of requisites, of things you have to do, but then there's a lot of transparency to guarantee that everything is above board, and that everything is legal and that everything is possible, right?
It is right, yeah. There is a lot of transparency. They can request pay slips, tax returns. A lot of the stuff's uploaded on credit files now, so you can see existing facilities they've got. Australia is also working on what they call open banking. So you could share all of your banking information from one bank to another if you're applying for a loan or a facility. That's not quite there yet, and I would say with the coronavirus that it was supposed to start on the 1st of July. I think that'll probably get put back now. Because banks and regulators have got many other things to worry about. But yeah, that's where they're getting to, is that you can just share that all between banks.
Mm-hmm. So how
for commercial lending?
Sorry?
Barry? I mean, what's the difference with commercial lending?
Commercial lending's not regulated to the same degree. So it can be much, much simpler. You can potentially buy, say, an office, and as long as the rent or the lease you're getting, the amount you're getting covers the loan repayments by a certain multiplier, you can use just that lease and essentially a few ID documents, and that's it. That's all they require.
Okay. How long does it take to get a loan approved? After all this paperwork.
Generally, the approval process is only a few days. The thing that holds most things up is the valuation. So a lot of lenders now, with the current environment, valuers can't get access to places to go and have a look. So a lot of them are doing online, what they call automated or computer-based valuations. So if you can get one of those done, it could be a couple of days and you can get approved. If they still actually do need to go and look at a place, but they're having trouble getting access, that will slow it down. And then something like a commercial loan, they tend to take, commercial valuation will tend to take at least 2 weeks to get done. So obviously that takes the time frame out for approval for those a bit longer.
But it's still a workable frame of time, 2
Yep.
weeks.
It's still a workable frame of time, and most lenders at the moment are trying their hardest to keep everything running as well as they can. A lot of transactions are all electronic in settlement, so it's valuations is one of the sticking points at the moment with some places getting access to places, but they're working on trying to get around that.
Now, Barry, with all the announcements that have been made, is government sort of supporting the lending process? I mean, I've read something about the government will take 50% of the loan risk. I mean, I'm not sure how it all works. Can you explain that?
So the government has a few parts of its stimulus package or economic package, which it's doing. It's allowing people to freeze repayments on loans for 3 to 6 months as part of the support that's coming from the government. The banks have agreed, and pretty well all of them are doing that now. There is also another thing there in the process of setting up, and the banks have to apply for it if they want to, where essentially a small business, and I can't remember, I think it's under 50 million turnover, but don't quote me on that one. It's still being drafted. What they're doing is they're putting together a package where you can get a $250,000 small business loan, basically working capital. It's unsecured. You can defer the repayments for the first 6 months. I think it has a time frame of about 3 years. They allow those loans, and they're essentially putting them in place to support businesses. So they've got access to up to $250,000 of working capital. The government is guaranteeing 50% of that, and the lender takes on the risk of the other 50%. And we've seen a couple of lenders come out with that so far, but there's supposed to be quite a few more in the next coming weeks.
Okay. Are there any hidden fees associated with the loan, and what are they?
Generally not with residential loans because they're so regulated, everything has to be disclosed. Commercial or business loans, there can be some fees. I mean, generally they are known about, but whether it's remembered is another thing. For example, with residential loans, if you pay out your loan early, there's generally no cost to pay it out early. In a commercial or a business loan, if you pay it out early, within, say, the first 4 years, they generally charge you a fee for paying it out early. Now, that fee is there, and sometimes the way they calculate that fee is a bit strange, but it is potentially a hidden fee at the back.
Okay. Who is eligible for government grants or like first home owners grant?
So in Australia, mostly it's citizens, permanent residents eligible for those grants. They're generally based around the value of the property you want to buy. So they get to a certain amount, and once you go over that amount, you're not eligible for the grant anymore. There is also another thing here in Australia called the First Home Loan Deposit Scheme, where the government is guaranteeing the 5% deposit. And that also has an income-based component to that grant. So if you earn over 125,000 as an individual, you don't qualify for that.
Okay, is this directed to a certain type of population, age-wise or income-wise or work-wise, or is it just general?
It's just general. It's targeted obviously towards first homeowners wanting to buy their first home, but age-wise, income-wise, apart from the loan deposit scheme, doesn't matter whether you're a high income earner, low income earner. It applies to all. It's just the value of the property tends to be the most influence as to whether you get the grant or not.
Okay. Why do I need a solicitor or a conveyancer when purchasing?
There's a whole lot of legal things that have to go on in the background. They do a lot of searches. They check the titles. They register various legal documents with different government departments, and generally just make sure that what you're buying is actually what you think you're buying. Sometimes contracts, I mean, there's been cases of where people have just bought the driveway of a place because they forgot, it had been divided into two lots and they'd forgotten to put the second part of the lot on the contract. So, it's just a way to check, and it's a good safeguard when you're spending the amount of money that you're getting, what you actually think you're buying.
Okay, how do you decide which loan is best situated to each person's unique situation?
For us, it's a case of looking at what, as you say, the person's situation is, both now but also in the future. So some people may be wanting to buy a place now, but they know that they're going to move out in a few years' time and treat that as an investment. So we try and structure it to best maximise that and the tax benefits around that. There might be certain policies that work better with a certain lender for a particular individual. So we try and target that. And sometimes it is if there are a nice, simple, income earning, wage earning person with very little credit card debt or anything, it might just be the best interest rate is the best thing for them.
Mm-hmm. To access the services, do you have to be an Australian citizen or a permanent resident? Or
for us, for lending here in Australia, it's generally based around Australian citizens, permanent residents, or certain visa classes. Paul would be the best one to know about the visa classes and what you can do and things. But say, for example, a bridging visa, you wouldn't be able to borrow money on because that's just short-term thing. But 457s, or I don't know if they're still called 457s, but those sort of visas can borrow. And
some visa categories you can't buy real property. So if you can't buy real property because your visa doesn't allow it, no one's going to lend you money. So some students come here and they can't, because they're on a strictly student loan visa where they need to return under that visa. They're not allowed to. There are other classes of visas where not only are they allowed to, they're encouraged. So it's as Barry said, it very much depends on the visa class you have.
Okay. What are the financial solutions that you offer entrepreneurs? Yeah.
Entrepreneurs are a little harder one for the services that we offer, because most of our services come out of major lenders or financiers and stuff. So sometimes they'll consider offering money to entrepreneurs. There's generally a class where you can do unsecured business lending, and some of those are more of the fintech-based things. So as long as you've got a reasonable turnover happening in your bank account, they'll lend you money. Interest rates are not great, but they'll still give you money. And they can work well if it's a short-term business, if it's only been operating for 6 months or so. As long as they've got cash flow going through the bank, they're okay with that. Whereas other major lenders generally want to have security over some sort of real property that they can take a mortgage or have some sort of security over. So there are a couple. And then, Paul would have access to other types of, might be angel investors or those sorts of people.
But I think that you're right, Barry, that there's two types of people when you come to entrepreneurs. You really have investors and you have lenders. And investors are taking equity risk where a lender isn't wanting to take that sort of risk.
True.
So Barry is a credit person, and Barry's business is involved in lending. Other people are in the investment business, and rarely do the two tend to be you're either borrowing money or you're taking an equity investment.
Okay. Let's wrap this up with a reflection about the crisis and the mindset we have to take in this moment in order to make intelligent and wise financial solutions for the future of our businesses and our investments.
Sure. I've had lots and lots of phone calls over the last couple of weeks from clients wondering about the same sort of thing. There is a whole heap of uncertainty at the moment with people's incomes and jobs and things. But I guess, it's something that there is a light at the end of the tunnel. The world has been through many different types of things like this before, and they've come out at the other end and keep on going. Life keeps on going. So it's, for me, I'm more telling clients it's about making sure you've got the funds to keep you going through the time. And then, be prepared at the end to get back on your feet and keep going again, but make sure you can get through it.
And we're seeing a lot of positives for people. They tend not to be borrowing money, they're using equity. So those people with money are positioning themselves for the opportunities that will come. In Australia, we're probably thinking about 8 weeks away. We're already news about food exports to Asia picking up because other parts of Asia have seen the worst of COVID-19 and they're looking forward to getting back to the things they used to get, like lobsters from Australia. But we are seeing people wanting to invest in minerals, in property development, that things will resume. And the consequence of things resuming, when equity gets mobilised, people will be going to Barry and saying, well, we want some debt to go with that. So, for example, we're working on a property development in Perth where the equity people are saying, well, as long as you can get us some pre-sales, we'll put the equity in, and I'll be ringing Barry and saying, and we need to find some debt to go into the transaction. So those people are there, and I had the phone call last night was from London. So we're seeing a lot of global interest, and Australians are investing abroad, but we're seeing interest in minerals, as I said, and in agriculture. And it's just the beginning, because people will see life has to get back to normal.
Yeah. Okay. So, gentlemen, thank you so much for joining us today. Thank you, Barry. Thank you, Paul.
Thank you, Anna.
Thank you, Anna.
Okay, so you can contact us at info@projectsrh.com.au, and you are all invited to our next Facebook Live session next May 15th, Australia at noon, or that's Tuesday, May 14th at 8 p.m. Colombia time, for our next session, we will be talking about how to plan in times of crisis to restart. We have another special guest, Bing Feng Zhang from Affinity Migration. So thanks for joining and see you next time.
Thank you, Anna Chris.
See you.
Bye, guys.
Bye, Barry.